let's move on over to our watch list for the day, because this is going to be something you've never seen somebody do before. I'm also going to share this part on a research site as well, just in case anybody missed it. But here's what we're looking at. Hope you're ready. Here's what we did. I talk about the financials all the time, and I say, that right now it's a stock picking sector, right? And so what that means is there are different industries inside of the financials that are doing better than others. What I did is I highlighted those. I took the entire financial sector and I categorized them by industry. So you got the index. We go down to the sector, which is financials, and one step further is to go on to the individual industries. Also labeled them here for you, but for example, asset management. These would be your fund managers. These would be your retirement companies. Think companies like us, but just a tiny bit bigger. You've got Ameriprise. You recognize some of the names, Invesco, whatever. Going through the list here, we've got the banks, the big banks anyways, Bank of America, Wells Fargo and stuff. We've got regional banks. These are all your sort of, not your global banks, not your sort of national banks, just the regional banks there. You probably recognize a lot of those. Going down through the list here, you got any company exposed to the capital markets, whether it's through software or whether it's through lending, things like that. Goldman Sachs, Charles Schwab, E-Trade, you recognize, Market Access, the bond platform there. So you see those names. You've got credit. These are any companies that issue or handle credit. So Visa, MasterCard, things like that. You probably recognize Discover, Capital One, American Express. You know the names. Moving on here, the exchanges. So I've been saying that the exchanges have been the better performers. Here's a list of all of them there. What we're going to do today is see if that's in fact even true, right? Maybe I'm wrong, so we're going to take a look at that. And then at the bottom, the biggest group is the insurers. These are the guys that have been pulling back just a little bit on a broad scope there, but otherwise lately doing pretty good. Here's what we did. Took all of these together, and we said, let's break them down by industry and track their performance year to date and over the last month. So we go over to that. Here you go. You got asset management, banks, regionals, everything I just listed off for you. The red is their year-to-date performance. You can see that the banks, not as good. The banks took it the worst, down an average of 36%, which you can verify by going back over here and just taking all the year-to-date the average year-to-date returns. I put them over here for you, just off to the right if you happen to be able to see that there. Minus 36.3%. So we go over to the chart. We see that's our worst performing area over the last month, up 3.4%. Not too bad. Regional banks also hit hard, 30% down, 7%. That's actually really good, right? The reason I say the exchanges are doing so well, and I miscolor-coded this one, that's my fault. The exchanges are up 12% for the year, and they're showing strength here over the last month. Not a lot. You can't say it's the best performing industry out of the group, by no means, but you certainly see why I'm saying that's where the strength's at. They're already up. They're already doing well. Everybody's looking at them. People are sitting at home trading, so these exchanges are making more, and that is continuing to go further and further. You could also argue that your credit space and your regional banks are an interesting area, at least over the last month. Maybe they're starting to pick up some steam. Now, to take it a step further, as I like to do and not sleep, we went through and said, okay, now let's find some stocks. How do we tell which stocks in this big old list of stocks might be interesting? Well, on the far right side there, what I did is I showed you the best performer over the last month that is also the least extended, right? So meaning it hasn't already taken off without you. And a great example would be PayPal, which would not have made the list here. So if I go through PayPal, up 12.9% over the last month, but it's one of the most extended stocks out there. What's that mean? What am I trying to highlight there for you? Let's go over and look at PayPal and just see if by chance it's extended. PayPal, come on, buddy. There we go. So PayPal, even though today has pulled back a little bit, best performer over the last month, but on a monthly basis, it's more extended than the others. I'll go and look at something else here like NTRE, there we go, Northern Trust, NTRS. And you can see that this one's had good performance over the last month, but not very extended, meaning there's still some meat on the bone possibly if you think that's a good pick. So if we look through each one of the industries here, we've got Northern Trust, I just mentioned, up 6% over the last month and not very extended. Still a beaten down stock, so I'm not saying it's a good stock. It just happens to fit the criteria that we're looking for. Bank of America, up 11%, but not very extended, only 4% there, so not too bad. Looking through here, M&T Bank, MTB, up 7%, but not extended. Probably means it's gone sideways a little bit in the sort of last week or so. If you look at regions, up 13%, same thing. You get the picture that I'm pointing here. I'm trying to go slow in case you want to screenshot some of these and keep them for you. But that's how you take a index, look at the sectors like we do every single day, and we just did, Then you go inside of it and say, is it okay to buy the whole sector here, or should I be focused on an individual industry inside the group? By breaking out the performance, you're able to see, wow, that's clearly the leader, right? Even though the color's wrong and Dustin messed up, that's clearly the leader there. We've got some hope in the regional banks there, little hope in the credit space there. I'd probably say this comes in second place because it's not down as much, right? And showing the greatest amount of recovery. But you now know, wow, it just doesn't make sense to be over here in these banks. They've been beaten down and they've only recovered a tenth of what they've been beaten down. That's not too cool. I don't like that. So that's kind of how I wanted to help you go through that. A little bit more than we normally do here, but like I said, wanted to share that with you. Also going to post this on the research site just in case somebody missed it, because I think this is super, super cool. Let me know what you think in the comments below.